Hey guys, this is Isam back in the third video of the training course. In the last video we covered what is a pair of currency, we covered the pips, spread, and we talked a little bit about candlestick chart, but the time I thought that the video was long, so I didn't cover the whole aspects of a candlestick. That's why I will talk in this video about candlestick charts from over, and I will talk a little bit about how to buy and sell and stop loss and take profit. Let me pull up my chart for quick here. Alright, as I said guys before, candlestick chart is chart analysis developed by a Japanese commodities trader called Hama. He was trading rise in 1700s. A long time ago, this guy realized that the market go up and down in forming a candlestick. And by the way, the origin of this name is coming from the basic candlestick that we use at home. I will show you a picture. Let me pull up the picture. This is the picture guys, and it's identical to this one because it has the same body and it has the wick, which is this one. Yeah, so I will start from over, as I said guys. In general, the basic information that the candlestick give you is the open, high, low, and close of the time frame. As you can see guys, I can change the time frame from a minute to a month, and it will give me the same thing. Each and every candlestick represents the time frame. If I put on 1 minute, it's gonna represent 1 minute. Each and every candlestick gonna take 1 minute to complete. And if I put on like 30 minutes, it's the same thing. If I put on 2 hours, it's the same thing. And there is two types of candlestick, a green and red. The green means that the price went up. The price is moving up. And the red is the opposite. The price is moving down. And this configuration of the candlestick means that the price opened here, it opened here, and it went down to this price, and then went up like this, up, and went up like this till the end here, till the high. And at the high point, what happened? The price went down. It went down till the close, and it moved to the next candlestick. And this what happened. The same thing here. The open will be here because the price is going down. The open is here, but this candlestick open here, and the price went up to the high, and went down all the way down to the low, and went up again to the close, and it closes here and moved to the next candlestick. And when the price move up and down like this, up and down, it forms the wick, and that's why they call this a shadow or a wick, because the price didn't stay here, it didn't close. But this one is the body. The body is between the open and the close, and the body is the most important part. So you guys may ask, how can we use this candlestick? Why the candlestick chart? Well, the utilization of this candlestick chart is very large among the traders, because they use them in identifying a lot of chart patterns or candlestick chart patterns. Let me pull up a picture and I will show you. Yeah guys, this is an example of how traders use these candlestick patterns, because the formation of 3 or 4 candlestick in a row like this one, when you see a green candlestick like this, and the closes here, and open another candlestick and closes down, you may tell that the price is going down. This is the pattern, and here is a setup, a trading setup for a trader. He will enter here, he will put stop loss just above this candlestick, and he will trigger for the take profit here in this area. Same thing in other, and all these candlestick chart patterns have names like bullish harami cross, like bearish, harami, all this has different names, different configurations, and they works all the time, guys. All right, I think that's all what you have to know about the candlestick chart. Let me move quickly to the next question. In the next question, I will talk about how to buy and sell, and I will talk about types of orders in the position size. Well, either you are going to buy or sell in the market. There is three ways to do that. Either you're gonna buy market. What does it mean? I will explain each individually. Like buying market is basically opening a position in the price given in the market. So you are not going to choose the price where you are going to enter the market, but you are entering in the price given in the market. So if the price, like for example, if the price is of the euro USD now is 106.49, you are going to buy at that price given here. But limit and stop are different. And the limit order, if you are buying a limit order, you are buying if you are buying a limit order, you are buying below the price. Let me pull up a chart and I will give an example of each. For example, this is the chart of the crude oil, just for the sake of explanation. Let's say that I'm going to buy market here. If I want to buy market here, I will buy, this is the panel of buying and selling. Okay. If I want to buy at market, buy market, as you can see here, I will just click on buy. All right. This symbol cannot be traded in FXM. Importantly, I will pull up another chart. For example, Euro JPY. Let's say, for example, sorry guys, let's say for example I want to buy here. I want to buy market order. I will buy at this price given, so at 118.25, and I will buy like this. Click on that. It's gonna give you buy market. So buy market, if you click on here, you're gonna enter immediately the market at this price. See, the position is opened. But the other type is limit. If you want to buy limit order, it's different. Limit order, you mean that you will buy below the price given by the market. Like here, for example, you believe that the market is gonna retest this level and go up like this. You believe that the market is gonna do like this and then go up from that price. So you pick this price up in the yellow, 117.360, and you buy at the same this time limit. You click on limit and you put your price here. So you choose the price where you want to enter, like 117.360, and you click on OK. What we did now is we bought a limit order. This is a limit order. But the third type is a stop limit. Sorry guys, a stop order. If you want to buy stop order, at this time you're choosing to buy above the price given by the market, like here, for example. Let me clear this. Like here. And this technique is used in the breakouts. Let's say, for example, that I want to buy at the breakout of this trend line here. I believe that if the price went above this trend line, the price is going to go up. But I want it to, this is a condition, I want it to break above this. So I will put my order here. And I will say, well, when it breaks above, it's gonna go up. That's at that time I will buy and click on stop, and I will buy stop. at that price, but I have to put the price here, like 100 on the yellow, 118.629, 118.629, and click. This is a stop. This is a buy stop. So this is the three different ways to enter the market. Either you enter in the actual price, this is a market buy, or you put a limit order. It means that you believe that the market is gonna go down and trigger you and go up again. The other one is buy stop. You believe that the market is gonna go up once it break above a trend line or a condition that you put. The same thing applies for the sell. I'm not going to repeat it again, but it's the same aspect in the same things. Either you're gonna sell market, means that you enter in the time given by the market. You're gonna enter at the price given by the market, or you're gonna like sell. You believe that the market is going to go down going to go up and down, so you put a limit order, or you believe that the market is gonna break above like a trend line or condition that you put, and it's gonna continue down. It's the same configuration. How much can I buy? Like the position size. There is three types of position size: mini lot, micro lot, mini lot, and standard lot. And some brokers don't give the micro lots, because micro lot means 100 units. This type 1 and type 2 depends on the broker configuration, by the way, guys. Like this broker, for example, when I click on buy, it give me this 1000. This is the amount that I want to buy. Like 1000 is 1000 units, which is 1000 units here is a micro lot. Like for example, this broker has a micro lot, but other brokers don't have micro lot. So you have to be careful if you want to open a brokerage account. Be careful about this. If you are a beginner, you want micro lot to be there. So the lot types are micro, mini, and standard. If you open a micro lot, you open 1000 units in this broker, or you open 0.01 in other brokers, like in MT4, MetaTrader 4, you use this configuration instead of this. Well, if I open a micro lot, how much profit or loss per pip? $0.1. So if the market goes in my direction 1 pip, I'm gonna win $0.1, 0.1 in the micro lot. But at the same time, I'm gonna win like in the mini lot $1, and in the standard lot I'm gonna win $10 because I'm opening more bigger position size. To explain this, I will take an example here. I will pull up another chart, for example, Euro New Zealand. Let's say I'm on this position already. This is a live trade. I'm gonna choose another one. Let's say this one. I want to buy here. If I bought this much amount, like 1000, I will buy a micro lot. That's a micro lot, and I will win for every pip 0.1. But if I open 100,000, it's much bigger. It's standard lot position, which is 100k units, and the MT4 configuration it's 1. So the win and loss ratio is $10 per pip. I'm gonna click on it, buy. You're gonna see that the market is down 1 pip, down 0.8. Now it's 0.6 pip. So for every pip, the market is gonna move $10, which is a very big position. If you are just started in trading, don't use this one. It's very risky. So I hope that you understand this, guys. and I hope that this is clear, and I'm gonna move to the third question. How can I put my stop loss and take profits? The stop loss and take profits are very, very important. Like, for example, just for example, I believe that the market is gonna go up from this price, up like this. That's why I bought from here. By the way, I'm up now for $4. So where I'm gonna put my stop loss, I'm gonna pull up this handy tool, and let's say that my stop loss is gonna be here. I believe that if the price broke below this trend line, my setup is no longer working. So I will put my stop loss just below that, so that if the price broke below, it's gonna stop me out and I will lose. Well, if now the price is going up and it's gonna hit my take profit, and I will win. So that's how you put your stop loss and take profit. This is my stop loss, and this is my take profit. But how to put them in the broker account? Well, you click here in this, and I'm just giving this example. I will talk more about MT4, the one I'm using all the time. Click here. This is the stop loss, and you put the price. You put the price, which is 1.42. 1.42, the yellow or the green, 1.42164. 164, and you put the tick. Sorry guys, this is I mixed them up. This is the check. This is the stop loss. The stop loss is the one below, 1.4598. 1.4598. And the take profit is the one above here, which is 1.42170. 1.42170, and you click on modify, and it's gonna pop up on your chart. This is the take profit, this is the stop loss, and that's how, guys, you set your trade. And we are up $37, and this is not my real account, by the way. This is just a demo account, and I hope, guys, that you understand this. I'm trying hard to explain everything and make everything easy. So take care, guys, and see you in the next video. Bye.